Welcome to Real Vision Crypto. I'm Ash Bennington. Today, I'm joined by Alex Thorn, head of firmwide research at Galaxy Digital, to talk about all the things happening in the digital asset space right now. Alex, welcome to Real Vision Crypto.
Thanks, Ash. Great to be here.
It's a pleasure to have you. Alex, you've got an extensive background in traditional financial services before you joined Galaxy. Tell us a little bit about your background and how you discovered the digital asset space.
I was at Fidelity for 12 years, Fidelity Investments, before I joined Galaxy a year ago, I think today. And most recently at Fidelity, I co-led Avon Ventures, which is the affiliated crypto VC firm that invests on behalf of the owners of Fidelity in the crypto ecosystem. And I was director of blockchain research at Fidelity Center for Applied Technology before that, which is Fidelity's sort of innovation laboratory. And had a whole career, mostly in legal and compliance, forensic investigation, capital markets, regulation, and regulatory investigations. Before that, so I was at Fidelity. I think I joined Fidelity about 9 months after Satoshi released, after the first block was mined. So I joined in September 2009, and the first block on Bitcoin was mined January 3rd, 2009. So I was there plenty before knowing about Bitcoin. I actually first heard about Bitcoin in 2012, 2013 during the Euromaidan protests in the Ukraine. There were people that were holding up signs saying, "Donate to us with Bitcoin." And I was involved in some, as a forensic investigator and, just general internet, early internet native. I mean, had been doing file sharing and had my website, alexthorn.com, up in 1999, I think. Was just sort of interested in internet culture and heard about this and really had no idea what it was. Thought it was really cool from a pure internet money standpoint. Didn't take the orange pill and learn about and care about its monetary policy or sort of the ethos behind what Bitcoin was until much later. And then in 2015 or so, Abigail Johnson, Fidelity's CEO and chairman, she got interested in Bitcoin and directed some folks to start looking into it. And in the process of trying to learn about Bitcoin, they reached out around the firm, said, "Who knows about this thing? Is there anyone who can help us? We're just, doing some consulting." I was found as someone who had been interested in it and knew about it, ended up doing a bunch of proofs of concept with them. There's a kind of at least Fidelity famous one where they sent me to buy something with Bitcoin at a place that accepted Bitcoin and then return the item and see if they would pay the Bitcoin back to me. Abby talked about that in her keynote address at Consensus 2017. She talked about me. She called me the Bitcoin Viking for my adventurous spirit, but not for the raiding and pillaging, she clarified, thankfully. And then basically once we had this budding Bitcoin department, I wanted to figure out what to do with my career, and I didn't want to stay in the legal world really. And moved over into working on blockchain research and crypto and Bitcoin full time, and that's what I've been doing since. So, now outside Fidelity, at being at a firm like Galaxy, whose sole focus is this industry, it's just sort of another step up in terms of the intensity that I focus on this space.
Boy, it really is, though, a propitious sort of series of coincidences that you have this background, not just in technology, but in legal, regulatory, compliance, forensics, all of the topics that have become incredibly important to the digital asset space in the last, say, 12 to 18 months, more so than ever.
Yeah, I mean, it is it's so interesting. I mean, I studied political science in college, but I was always sort of a techno geek. I mean, I had broadband when I got my parents to buy us broadband when everyone else had dial-up still. But I'm 35. That puts me squarely in the millennial era. And what was so interesting about this is that we had AOL 1.0 when we were 8, and then we had ICQ and AIM when we were in middle school, and we had Napster in 7th grade. Then we had cell phones and text messaging in high school, and then we got Facebook freshman year in college. We were the first freshman class to get it. Right. And so we sort of had everything right as it happened. Right. If you were just a few years older, then you went through college with no social media. If you were just a few years younger, then it was totally native to you. And I see this. I have a lot of friends my age that we all sort of were interested in these things as they happen. We had BitTorrent basically right when Bram Cohen released it. Right. We were on these things right as they happened. So I think there's an interesting, cohort of folks my age in this industry because they were kind of primed to be accepting and sort of first movers on new technology. And I find that for me, at least, it's always been a passion of mine. So, that's why I was interested in it to begin with. It was a lot of luck in making my own luck to actually get to work on it at Fidelity. It's a huge organization. It's not easy. And again, most places, what was unique there, one of the things that was unique there, most big organizations, and we know now basically all big organizations are doing something in this space or at least looking into it. But usually it started with some middle or upper middle or even junior employee pitching the concept up and in many cases having to grind and spend years to convince the higher ups to let them work on it. In our case, it was the owner and CEO of the company or like sending it down, right? And so I think that speaks a lot to why Fidelity was early on this. And early on Bitcoin, and there was more opportunity. And you see, by the way, a huge number of Fidelity alumni working in this space that came through that sort of different versions of the path that I took through Fidelity to work on it there.
So tell us a little bit about the transition to Galaxy. You guys, you and Mike and some other folks are building a pretty big machine over there. How do you think about what you're doing from the 50,000 foot level?
Yeah, I mean, we think of it as being a technology-driven financial services firm in the scheme of things, right? We have a range of businesses. You can trade with us. You can invest with us. You can get advice from us. We mine Bitcoin. We also invest ourselves on our balance sheet. We have a huge venture portfolio. And all of this, of course, this is all basically in public blockchain, right? So we're not, building, blockchains to fix supply chain, or some other enterprise business use case. We're really focused on public blockchains, cryptocurrencies, Bitcoin, Web3, NFTs, right? The sort of main crypto use case. We're deep into it. We mostly serve institutional investors of various types with a range of products, right? I sort of already said this, but Fidelity has a giant. This is what the innovators call a giant legacy business, right? I mean, it's the biggest 401k provider in the United States. They have a massive mutual fund business. I think they're the third largest. And they have a huge brokerage operation and a bunch of other stuff, right? So crypto can't be their focus. They have a business there, but they'll always, as any traditional incumbent trying to operate in an innovation space, right? They have, competing interests. And so that was mostly why I was interested in coming to a company like Galaxy. And, when I looked at where I could go, I was super intrigued by the fact that Galaxy is diversified, big, institutional focus, which plays to my experience, and dedicated to just expanding the growth and adoption of this space and making it easier for people to interact with it and move capital in and out of it and around it. And that's what we're focused on here. And we have, our clients range from high net worth individuals to sovereign wealth funds and everyone in between, right? Endowments, high net hedge funds, family offices, allocators, right? That's who we're serving. And it's been super exciting. I tell people, we just arrive at insights, I find, transitioning a little bit to research faster than anyone else that I know, because we've got, even just in my area where I sit, there's probably 35 of the smartest crypto people I know all sitting right next to each other, right? So when something happens, we're figuring it out with all these different viewpoints, throwing it in the petri dish and coming out with the insight or the sort of the range of possible insights, and then getting to select, what do we think is the best insight on this topic, I think faster than anyone else I know in the space.
So one of the interesting things to me about your title there is head of firmwide research at Galaxy Digital. That suggests that you're sort of across all of those different verticals that you've just mentioned. Tell us, what does that mean? What do you do? And what's your day-to-day like?
We have a team of analysts, and we're building out a big data operation, and we're hoping to try to do more on the innovative tech R&D side as sort of what lives under the research department. The main point is that our focus is examining these technologies, trends, markets, and generating real insights for people. So when we write research, and that includes our various business lines, of which there are 5 major ones I mentioned, right? And so it's not just, here's that thing, here's an ecosystem map, here are the players. Everything we do is focused on telling you why it's important, why it matters, but also offering a way to think about it. Now, that doesn't mean that every report we're saying, oh, this is bullish or this is bearish. In fact, we're almost rarely saying that. Typically, it's here's the a mental model. Here's our mental model for how we think about this. If it's let's say it's a protocol, this protocol's competitive landscape, its edge, its risks. Does this fit into a trend? Like, we're always trying to explain why something is important and why it matters. And I think that's where we have an edge over some of the, the other folks that work in this space. That's always been my direct, that's what I drill into everyone that I work with, which is like, we need to take that extra step. Folks can disagree with us, but we're going to try to lay out a really compelling argument for why we think the way we do. Feel free to disagree, and we engage with our clients on a regular basis. That's the other thing, the firm-wide part. We are the folks who are dedicated. We are not salespeople, right? We are dedicated to learning about and unpacking and understanding all the multitude of things happening in this ecosystem, and educating our businesses, and helping, in some cases, even guide product decisions and providing the reference material and understanding required to operate in the space. But also working with all of the clients of all of our business units. That's a huge resource, I hope, that we're offering to the clients of Galaxy's various business lines, right? So this isn't research for the trading business or research for the asset management business, right? It's research for all. And that's sort of what we're working on building out even more, is providing more content coverage and support to Galaxy clients.
The other interesting aspect about this is that you put out some of this research publicly. In fact, you've got a Twitter feed at GLXY Research. This is Galaxy Digital Research's Twitter feed, where you're putting out this research out publicly. Tell us a little bit about how you think about that versus the information that you're giving to your clients.
Look, we're crypto native folks. Like, we believe in the open and transparent and collaborative nature of this space. Like, we're not like experts in a bottle. Like everyone else, we're interacting with the builders, the other investors, the communities on Twitter and on Reddit and on Discord, right? Like, we want to participate and offer our view and also and we read everyone else's views, right? So it's important for us to be involved, and I think that's true, by the way, for anyone operating in this ecosystem, whether you're a builder, an investor, or something else, right? Like, you can't operate in a bubble. We do provide more bespoke consulting advice, breaking down of our research work for our clients than, of course, we do to the public. But I think it's also just important to share our views and try to help advance the discussion on these things in general, whether it's Bitcoin, whether it's Ethereum and smart contract competitors, right, and whatever it is. We just want to participate and make sure everybody knows, can share in our understanding to some extent, right? And we really have. I think last year we actually publicly released every note that we released to clients at some point. Not always right away, but ultimately we did.
Yeah, it's definitely very much a trend or a theme, I think, in the investing space more broadly now, seeing research coming out. I know Kathy Wood, for example, lots of folks on the traditional investment side are like, wow, this is so strange. She puts this all out. She publishes her positions every day. This is kind of the world that we live in as digital asset natives.
Yeah, you just have to be part of it. It's like, I can't tell how many people I've told over the years when they're like, how do I get smart on this? And I'm like, the very first thing you need to do is follow all the people working on it on social media, right? This is when they say, like, about Twitter, right? I can't believe this app is free. Like, that's absolutely right. Like, I'm learning more in real time by following my friends and other builders in the space. We're all talking with each other, right? And figuring it out as we go.
Yeah. So talking about that, figuring it out as you go, the current views on the space, we were talking a little bit off camera about your views on Bitcoin. This is something that you're very passionate about. Talk to us a little bit about where you think Bitcoin is right now.
To me, I view Bitcoin as a decentralized distributed monetary network, and it has it is credibly distributed and decentralized, I think, more than any other network in this ecosystem. In fact, if you compare other networks to Bitcoin on things like decentralization, my view is that they mostly all look pretty bad. Obviously, there's a range there, but I think it's Bitcoin's credible neutrality, and I sometimes people disagree with this quite strongly. The meme is 21 million. The fixed supply is what makes Bitcoin. I think obviously that's integral, but to me, it's actually the credibly unchanging monetary policy that makes it that is truly unique and distinguishing, not just from other cryptos, but frankly from all other monies in the world. My point being that theoretically, if Satoshi had said, I think it's chancellor on the brink of second bailout for banks, and my the central bank must be trusted not to debase the currency, but history is full of breaches of that trust. These are quotes from Satoshi. If he had said all of that and then said, therefore, it's 1% permanent inflation unchanging forever, I think the meme would be 1%, not 21 million. And that would be almost as powerful in my view. It's the fact that it's not arbitrary. It's not controlled by technocratic processes. It's not elastic in the face of monetary policy and economic issues and tinkering. To me, that's its core. That's what permanently distinguishes it. And I don't think that will ever change. And I think that's by itself a massively powerful idea. It's what got me interested in this space. I remain incredibly interested in Bitcoin for that reason. And just to bring it up to today, Bitcoin's never been more widely held. It's never been more widely used, never been easier to actually use it. And I don't mean buying and holding on exchange, which also has never been easier to do, but Node software is getting easier to run. Yourself wallets, the UX is getting so much better. Things like the Lightning Network make it more easily spendable, and those are getting easier to use.
Right.
I think Taproot is a pretty powerful upgrade that we'll start to see a lot of benefit over the next couple of years as builders and wallet providers start to integrate and use the features that it makes possible.
Taproot, we should say, for people who are not as close to the technology as you are, Alex, of course, was an upgrade from 2021 to the core code of Bitcoin that implemented some new functionality and extended the existing functionality.
Right. Bitcoin's first upgrade since 2017 when segregated witness was enacted. And that upgrade caused a huge dispute in the community that led to the creation of Bitcoin Cash and other derivative forks, right? And, just as an aside.
And are still contentious today.
Right, exactly. I mean, that was sort of the culmination of the block size wars of, the prior couple of years, which was a dispute about how to scale Bitcoin to serve more transaction throughput and such. So I won't go deep into Taproot because it's pretty complicated in the scheme of things, but I think it's really notable that Bitcoin development is meaningfully distinguished and its design decisions are meaningfully different than the rest of the space. And I think that's good, not just for Bitcoin, but for these other things.
Alex, for people who may not understand how those design decisions get made in Bitcoin, tell us a little bit about how that process works and how the community effectuates that change.
So it's a totally open source project, right? So that like other open source projects, there are maintainers that maintain the code, and anyone can contribute and suggest changes. Obviously, it's an incredibly important project. So open source software is extremely, it's a meritocracy, right? It's not a democracy. You don't flood GitHub with 1,000 people saying do this and therefore it happens. Things need to go under code review by folks who have established that they can do that code review, and it's very deliberate. That's true for many of the projects, if not most, in crypto, to be clear. That's how most of them operate. What's different about Bitcoin is there is no foundation or giant pool of raised capital sitting there to fund and guide that development, because Bitcoin has no, it has no pre-mine, as we say. There is no official Bitcoin team, right? In that sense, there's a long history of sort of who's maintained Bitcoin over the years and how those handoffs have happened, but anyone can submit ideas and contribute to Bitcoin, and honestly, funding Bitcoin development, because there isn't a foundation or core, pile of capital there to help pay for its development, has always been an interesting challenge, and that's true for all truly open source software. I think the innovation, if you can call it one, that helps other newer projects is that a lot of them raised a lot of money, and a big portion of that money to launch these newer protocols is often set aside for a foundation whose goal is to pay developers to develop it, even if they're open source projects, which most of them are, right? Those open source developers have funding. In Bitcoin, the funding has typically come from the core developers that work on it being employed by a Bitcoin company, right? There's contributors from Square and Blockstream and many others. It's been from sort of nonprofit organizations like Brink or Chain Code Labs that fund development, and then also contributions by both directly individuals there's a whole bunch of places that individuals can donate to Bitcoin core developers, and then a lot of companies that work in this space. I mean, my alma mater, Fidelity, contributes to MIT's Media Lab, which has the digital currency initiative. There's tons of exchanges. I won't name them all because I'd be leaving people out, but I mean, tons of exchanges fund developers. The Human Rights Foundation funds Bitcoin development. But it's all basically through donations and grants, right?
So you mentioned the Bitcoin ecosystem, things like the layer 2 protocols, like the Lightning Network, and also the ease of use in terms of some of the software or ecosystem that's evolved around Bitcoin. Where do you think we are with that right now in 2022?
I think from a sort of a wallet and interacting with these chains, like a user experience perspective, we're extremely far. So much better than we were even just a couple years ago. You've got a company like Cash App, which is Square's mobile, I guess we call it a mobile neobank wallet or something like that now, right? Because you can trade stocks there. You can use it like Venmo and spend money to and from your friends, but you can also buy Bitcoin. They've integrated the Lightning Wallet, which is this layer 2 network that lets you send Bitcoin really quickly and cheaply. So, I mean, that's leagues beyond where we were just a year or two ago, that mainstream like fintech apps have integrated something as deep tech in Bitcoin as the Lightning Network. I think there's still, in terms of running your own, operating as your own bank in Bitcoin, meaning running your own node, using a non-custodial wallet, doing something like operating on Lightning without the use of a third party, that's still, I think, beyond the reach of the majority of people just generally. It's also, though, never been easier. I mean, there's projects that I really like. One of them is Umbrel, makes it extremely easy to download and operate a node at home. It's like, think of it like an operating system for your Bitcoin life. And so there's been huge advance. It also makes it easy to run Lightning. There's a bunch of tools now for Lightning that make that easy. But still, we're talking about like running your own little server at your house. Like, for a lot of people, that might be too much. But that, even though that alone has gotten easier, Bitcoiners are extremely focused on making that easy. And that's obviously integral to Bitcoin's overall value proposition. We want more people using it, actually, not just having financial exposure to the asset. But of course, I mean, think about all the exchanges. They're all so much more professional than ever before. You can now access Bitcoin and Bitcoin products at places like Galaxy, right? We have funds on Morgan Stanley's platform. There's plenty of places to gain exposure to Bitcoin, many of which are now through your traditional sort of financial exposure avenues, right? Let alone, obviously we've got a Bitcoin futures ETF now, so you can get some exposure, even in an ETF vehicle. Hopefully that stuff gets better, right? But there's never been more.
It's interesting. There's never been more. It's never been easier. And yet it still feels like we're, as you suggest, very early in the process in terms of user interface, user experience. Bringing on my mom is not running a Bitcoin node at the moment.
I think on that case, like, one of the things I always thought that could work is like, maybe we can put these Bitcoin nodes inside your home router, right? And that maybe we might see the Netgears and the Erises and these companies that make that home networking infrastructure start to integrate some of these self-sovereign internet money tools like Bitcoin. And that might make it easier, right? But I agree. I mean, look, this is a new paradigm. The idea that you can have a totally decentralized, anonymously launched, hard money that's a non-sovereign commodity money, right? Yeah, it's it's open source technology. Like, I mean, this whole thing's pretty wacky in the scheme of things. It's completely new for your mom to even have to consider whether she could do that, right? So I think, given that, I think we're pretty far along. But I totally agree. I mean, it's just a crazy thing that we're doing here, and it's just amazing how far we've come, but obviously a long way to go.
Yeah. And how do you think some of that might begin to evolve? I mean, we're obviously having this conversation early in 2022. What's on your radar in terms of what you're watching in the Bitcoin ecosystem that you think is particularly promising right now?
I continue to be very interested in the Lightning Network in general. I think Bitcoin is primarily a commodity money. It doesn't seek to be a generalized computing platform like Ethereum, right? We're not trying to build on Bitcoin specifically on its base blockchain, virtual machines and things that can do, random types of computing and application development. Bitcoiners have really focused on keeping it lean and distributed to maintain that core money thing. But Lightning, I think, is a meaningful and increasingly useful addition to that. It's a layer two. It derives its security in many ways from Bitcoin's layer one, and it sort of easily provably discredits the old notion that Bitcoin's too expensive for small transactions or too slow. I mean, that was always one of the main critiques on Bitcoin's use as money, right? Or I should say as a medium of exchange, right? I mean, I think, obviously money is a lot more than just you buying something with coffee, or you buying coffee with Bitcoin, in the morning. People save their money, they invest their money, right?
Yeah, it's almost this idea of the store of value function militating against the medium of exchange function and how those get balanced out.
Exactly. And there's always been questions. I mean, people say, if I think it's a long-term hedge and it's going to go up, why would I spend it? Well, I mean, that's a whole argument about how people use inflationary versus deflationary money. And the short answer is people still spend that money. In fact, we think at least $5 to $7 billion of Bitcoin was spent in 2021 simply at merchant payment processors who service actual merchants that sell goods and services. So not even peer-to-peer and certainly not dark web. This is people sending money into the wallets belonging to payment processors that let merchants accept Bitcoin, right? And that's a lot of money. I mean, it's not like Visa levels, but Bitcoin went up huge in that time, and people still spend it. That was like 2 or 3 times the prior year. So people spend Bitcoin, but you basically couldn't spend it on coffee because you'd stand there for a minimum of 10 minutes. The fee could be high, right? That's how long a Bitcoin transaction, a minimum that it takes to clear on the Bitcoin network. But with Lightning, I mean, we're talking instant. It's literally like milliseconds. It's faster than swiping a credit card. And it has, different but meaningfully powerful censorship resistant and decentralized features, right? So that's always how Bitcoiners have believed in developing, well, not always, but that's the sort of ethos now is let's build in layers so that we preserve the fidelity of the underlying blockchain and the features we care about there, and we can build on higher layers, sort of the way the internet was developed. I think I use this as the example, but I'm always interested in Bitcoin's use for payments. Is it going to be used more widely? I'm always tracking that. Lightning makes that more possible. So I'm following that ecosystem significantly. I'm looking to take a trip to El Salvador to learn more about how people are using it in an everyday basis in a country where it is legal tender. But again, I still also view it as pristine collateral, the hardest and soundest monetary good man has ever created. And I think there's interesting geopolitical implications for that. And El Salvador is obviously one example of a country that's sort of meaningfully adopting it. I think we'll see more. I think there's inflation issues that make it interesting, even outside the United States. I mean, in many places, much more than the United States. As a type of protection, people say it's very volatile. It certainly is very volatile. That's because the world is deciding now whether everyone's making up their mind one way or another what they think about Bitcoin, right? And as more people make that decision, again, one way or another, that volatility will continue to come down. And so it, I think, becomes a more meaningfully credible alternative to central bank money, not even any particular central bank money, but again, those features I talked about before. So that's always something like, so national adoption or adoption in the face of inflation is super interesting as a store of value also. And I think we're going to see more. I mean, I think we took an internal poll at Galaxy of Galaxy employees, and I think the largest cohort said 1 to 2 additional countries will meaningfully adopt, along the lines of what El Salvador did. Again, we're just literally guessing, but I think that's a big trend to pay attention to as well.
You mentioned price. Let's talk a little bit about price. We're having this conversation here in February of 22. Obviously, price volatility coming off the period between November hitting an all-time high of November of 21, just shy of 69,000. And then from a peak to trough perspective, a max drawdown of, I think, 51 or 52%. Significant volatility. How do you think about price outlook, short, intermediate, and longer term?
Yeah, I think now at this exact moment, not price to trough, I'm happy to give that number because I didn't have it at the top of my head, but I think we're about 37 or 38% off all-time high today as we speak. Look, I mean, that peak came right around the Bitcoin futures ETF launch in November. Obviously, a lot of enthusiasm there. By the way, that rippled out to the other networks as well. ETH had its peak right around then. Then you saw the alt L1 sort of trade start to happen. There was a big rotation, right? First it was Solana, Luna, AVAX sort of had their peaks, and then folks went and found Phantom and Near and Atom, right? And like this sort of rotational thing, which tends to happen around like local tops. And so, I mean, I think in the near term, I mean, I'm extremely bullish. I think if you look at like this drawdown, even in context, it's not that big in the history of Bitcoin drawdowns. I mean, it is big, but right. I mean, it's certainly not the biggest.
Enormous. I think we have peak to trough drawdowns of 92% is the greatest, and then like 87%. I mean, these are really significant.
Yeah.
And so you could sort of say you're seeing higher relative lows from peak to trough declines.
And even through this summer, right? The prior, like, what was it, April all-time high, and then the drawdown around the China ban and all that stuff down, we got to like 28.8 maybe on a candle wick over the summer. I mean, we didn't even get that far down this time. I mean, obviously there's still time. It's not, I think in the short term, it's very clear with risk appetite all over the place and the Fed making moves and central banks in general, like looking to tighten. There's a lot of questions, right? And folks viewing crypto and Bitcoin specifically, but crypto more broadly as a risk asset, it puts it in a bucket with risk assets, which obviously are undergoing sort of a lot of turmoil as everyone tries to figure out what the central bank, near-term central bank policy is going to be. So that's obviously near term. I mean, I wouldn't say or try to predict that there won't be volatility or that it couldn't go down further. It definitely could. I'm not sure at all, right? I mean, I don't have a crystal ball, but I think some things are meaningfully different from even the drawdown last summer. One, we have again, we're beating these old topics over and over again because they just keep getting better. I mean, we have better regulatory clarity and understanding than we even did last summer, right? We heard what the presidential working group had to say on stablecoins and regulation in that ecosystem. It's interesting, but it's not going to like overthrow, Bitcoin. We had all the fear around the infrastructure bill this past summer and this broker rule that could possibly ensnare coders and even node operators and stuff. Treasury has said that they has specifically ruled out applying it to those operators, to software engineers, coders, node runners, stakers, miners, right? So that has kind of resolved. And then the obvious thing around just institutional interest, right? We've been talking to a lot of allocators in this space, endowments and pensions for months and even years, right? And they have to move slow. And these aren't folks who get interested in something and then when there's a period of volatility, all of a sudden they're not interested anymore. They have to invest on super long timeframes. So they're coming at this space with a very long-term view, and almost none of them have gotten in yet, right? But they're all looking at it. They're all looking at it still, and that's completely different than even 6 to 12 months ago. And when we talk to them, I mean, they really are. Again, they're not unsophisticated either. That one crypto person who maybe convinced them or was banging their feet 2-3 years ago to look at it is now a team of people at most of the big places. And they're doing deep work, right? Like that's still going to happen. And also, like when you think about the drawdown in general, it was caused by factors, extrinsic to crypto. It wasn't something, and it wasn't some jubilant, overly exuberant bubble pop like when you look at the shape of the 2017 run up either, right? This is a macroeconomic question. It wasn't something that was because of overinvestment or exuberance in the space or some other underlying, lack of viability intrinsic to crypto or Bitcoin specifically. So again, like I think there's plenty of reason to be bullish and there's a lot of capital on the sidelines still looking to come in. I mean, I could go on and on about this. The amount of venture dollars that were invested in this space last year is absolutely astronomical. I pegged it at 33 billion. Other estimates I've seen are like 29 to 35 billion. I mean, we're right in there. I mean, it's kind of hard because there's so many deals and we have to categorize them as crypto or not crypto. And but 33 billion, that's more than all prior years combined. I think the average venture fund vintage in crypto that is focused on crypto last year that was raised in 2021 was $300 million was the average 2021 vintage. Like that's insanely large amount of capital. Something like over 60% of the multi-time fund managers that raised in 2020 also raised a new vintage again in 2021, right? So there's just so much money pouring into this thing. That money is going to go to folks building stuff. That stuff that gets built is going to make it easier, faster to use crypto, right? And Bitcoin, simpler, better, right? The experience will improve. So, I mean, there's such a flywheel happening here. And again, just generally adoption's higher than it's just ever been. I mean, just look at the Super Bowl ads that we just saw. You got Larry David pitching FTX. It's like one of the greatest ads I've literally ever seen in my entire life. I like, it's like a whole TV show in a 2.5 minute period. Shout out to that team and folks that worked on that ad. But like, it's just everywhere. There's tons of money. There's more people building, right? I mean, it's just hard to, you really can't be bearish. This is really sort of is this a risk asset? And it's more correlated than ever in general to risk assets, but that's a function of who's buying it today, right? I mean, this thing's being owned by traditional investors now, a lot of them, right? And they have to put it in some bucket. And, Bitcoin has the features that make it a good, hedge against things, right? It's incredibly unchanging, a fixed supply, it's decentralized and blah, 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 right? But like, if you don't put it in your gold bucket, and I don't think you should because it's a lot more than gold, I think, in a lot of ways. Where do you put it? And most say, look, this is still like an emerging technology concept. It's going to go on our sort of like high risk. And because that's how people are trading it, that's how it's trading, right? And I think that's going to be true for a little while. But again, you'll see volatility come down over time. We have already. That was a long answer, so just giving a lot of examples.
No, so many fascinating points there. Look, that's the double-edged sword when people talk about correlations for everything going to one. I'm not sure that happens with Bitcoin per se, but certainly when you have institutional investors having to figure out some asset allocation bucketing, you're going to see higher correlations than you have in the past. It's almost just inevitable. To pick up on the point that you made about regulatory clarity, in many ways, it sort of reminds me of what we were just talking about with the UI UX component of this, which is it's getting better. But we're still very, very early. We're still far from a grand unified solution where large financial institutions can have extreme confidence that there's regulatory clarity. I mean, we don't yet even know ultimately what the regulatory infrastructure is going to look like for these assets. Still very early, but as you say, seems to be developing, and it seems to be, we can at least say that there is not going to be a sort of blanket opposition to this, and it's going to be something that we're going to see an integration into the traditional financials. How exactly it shakes out, I think anyone's guess, but we're certainly moving in that direction.
Yeah, I totally agree with that. I mean, this is no longer really a question of is Bitcoin going to exist? I think everyone agrees it is, and so now it's governments like the United States government trying to say, okay, like, well, where does it fit in? What is our role? What is the role of our existing regulatory agencies and rules and processes? Where do we need additional clarity from either in legislation or something else? And also, like, just think about how impactful the crypto and Bitcoin industry's lobbying efforts have been in Washington. I mean, we have prominent U.S. senators who are aggressively publicly advocating for the space, themselves deep into it and interested in it. We had, I mean, and that alone, but we've got more advanced lobbying and influence in Washington, more money being raised and donated by the crypto community, right, to folks, and so to the extent that they also go and seek additional legislation to help give more clarity and sort of either make new guidelines or clarify existing ones for this industry. We have a bigger voice than we've ever had. I mean, we're in this again, people, it's like, I'm here saying, if you don't believe it, like, people like crypto, they love Bitcoin. They're using it. 20% of Americans have owned cryptocurrencies, right? Like, it's not like, so that comes along with a lot of stuff, including, right, people have to take it seriously. Regulators have to figure out what it means. Politicians have to wonder if they take an anti-Bitcoin stance, will that hurt them in their election? Like, it's a large cohort of people. It's not as niche as it once was. Like, sometimes I feel myself having to hit myself and remember how like crazy it would have sounded 3 years ago if I said this to myself. How we would get excited by one headline about one traditional saying that Bitcoin might be interesting. Used to move the price, right? And now it's like, dude, everyone's looking at it. Like, if you're basically, Novogratz likes to say that, crypto is basically like 50 bips of global wealth. And if you don't have that allocation, you're short. If you're not long, you're short. And like that's the reality at this point. You cannot own it. Not everyone has to like it. Not everyone has chosen to invest in Bitcoin and cryptocurrencies, Web3, NFTs, whatever part of the space could be interesting to you. Like everyone can make that decision. But like this is a real thing now. Like it's just crazy to think about. I don't know. On the regulatory side, like there are still big questions, obviously. And you're right. I mean, the grand unified point, I mean, we've seen a proposal, I think, from Senator Cynthia Lummis. Actually, I don't know if we've seen it yet, but there's been talk that there will be one forthcoming for some kind of, like overall crypto regulator, right? There was back and forth between the SEC and senators in Congress about like what authority we might need. And there's questions, but like at the end of the day, it's more about how do we fit this into our world and how do we think about it as a government and a people. It's not, is this thing good or bad? Is this going to happen or not? I think feels like that ship has sailed.
Yeah, I think that's very well said. The other interesting thing about it is there's clearly a generational aspect of this. There's definitely a demographic component to this. When you talk to people who are in their 20s and 30s versus people who are in their 50s and 60s, there's just a clear divide here. And, there's much has been made of this sort of partisan aspect, because it's 2022 and everything is a partisan issue. But it's fascinating to me to see young people in their 20s who are on the progressive left, for example, as well as the libertarian right, who are equally excited about this technology.
Yeah, it absolutely is nonpartisan. I think you do see, everything. You're right. Everyone wants to politicize everything to some end, but like just a great example, right? I mean, Bitcoin Bitcoiners were donating to both the, these protests in Canada, which, were seen as the Freedom Convoy, and they also donated to the End SARS campaigns in Nigeria against police brutality, right? Like, and again, because Bitcoiners is an extremely diverse group, let alone, by the way, when you expand out and look at the broader crypto ecosystem. I mean, Bitcoiners are really obviously focused on money and changing and fixing money and how we think about money. But of course, if we step into Web3, if we look at the Ethereum ecosystem, there's a ton of other stuff being built too that's just further dramatically expands the tent of people using this technology to do interesting things. I mean, think about all the artwork and some Bitcoiners really don't like NFTs. I actually really like a lot of the NFT projects, in particular something like Art Blocks, which I find almost all of that curated content incredibly beautiful, right? So you have literally beautiful art to some extent, right, being sold, being generated on chain. Again, these are generative art, so like they literally are generated on chain. This is not drawing a JPEG and selling it, right, and selling a JPEG. Like the art itself is created using, with the algorithms that create it stored on chain, right? So you're buying the algorithm that made it. That to me has always been interesting. But again, when you start talking about stuff like that, I mean, you're bringing in the tent just gets bigger and bigger. And sorry, Ash, you mentioned demographic. I did want to agree with you on this. There is obviously like changing demographics to get the great wealth transfer. You've got, digital natives. You've got especially folks younger than us, right? I mean, you've got people who kids. I've got cousins who play Roblox. Like, there's people in the metaverse, basically. Like, right? That exists already. It's not a hard sell for those people, right? That grew up in a fully digitized world. I think it's just, I get it. You didn't grow up with email. I mean, I had email, in elementary school. Like, if you didn't have it, like you view the world differently. I think this digital transformation is much easier to understand for younger and embrace for younger generations. But of course, that bodes incredibly well for its further adoption, right? I mean, I really do think we're gonna look at a Bitcoin transaction or a MetaMask wallet like we look at an email. In 10 years, it'll be as blasé as that. It won't be. I mean, and obviously UX, I think, has to get somewhere. But even if it doesn't have to be. This is the worst part. It doesn't have to be easy for my mom to use. The kids are going to be using it, right? Like, the time rolls on. Like, and I think it makes so much sense. If you look at all the surveys, younger people both view cryptocurrencies more favorably and have higher levels of adoption, right, than older generations.
Well, I'm an optimist about this. I've been a nerd since the 1980s, long before it was cool. And I remember these technologies. I remember Unix mail servers. I mean, they were just incredibly antiquated. And clearly, if there's one thing that seems to be just a truism across all technologies, is that the user interface, user experience component continues to incrementally improve until there's mass adoption. I think MetaMask, or the MetaMask equivalent 3, 5, 10 years from now, is going to be virtually unrecognizable to what we have from a UI UX perspective. This is all going to go behind the scenes, and it's going to become much more user friendly. I mean, I remember text messages. The Tap 9 was terrible functionality. You had to tap it out on a Motorola StarTAC 9 phone, right? You had to hit the 7 button 3 times to get a Q or whatever the hell it was, right? It was miserable.
I mean, Apple didn't even, the iPhone didn't even have copy and paste until like several versions in.
Right. And I mean, I remember people in their 40s and 50s at the time saying, why do you text people? That's the dumbest thing in the world. And now my mother is constantly on her iPhone texting people. It's just an inevitable progress as the thin end of the wedge gets underneath the door, it just expands and you get better user interface, user experience. I think it's just an inevitable consequence of the development for it. And it's just, couple that with the demographic favorability that we see. It's hard to see how this technology is ever going away. What does that mean for the price of Bitcoin and Ethereum tomorrow, next week, next month? Nothing. But the broader trend, the ability to have decentralized networks that can, without a trusted third party, create trust, value, and identity transfers. This is something that's just totally new. Yeah,
it is totally new. But there's a lot of people and a lot of money working on making it great to use, right? I mean, again, like you're totally right. It's sort of the unstoppable march of technology. I mean, there are, again, I can't emphasize, go look, we put out a report on the venture money that was raised by crypto blockchain startups in 2021. I mean, there were like 40 plus companies that raised at $1 billion or higher valuation, right? I remember when being a unicorn was like a huge deal. Like, well, there's 40 of them at least in crypto. And that doesn't even include companies that we don't think raised, like Binance, that's obviously one, right? So like these, the products and services are here and coming. Like, I think we're actually going to see it even accelerate even faster, like the user experience, right? We're not just going to get there. Like we're going to get there sooner than we probably think. But I totally agree. When you think back about like listservs and bulletin boards and all that stuff in the early 90s internet, like, it's literally unrecognizable to the internet we have today. And there's no reason to believe it doesn't go the same path.
Yeah, and another fascinating point, you mentioned NFTs. The other thing that I find fascinating when you go to these NFT conferences like NFT NYC is to see the people there are not traditional developers. They're not computer science people. They're artists, they're rappers, they're musicians, they're people from the arts community who are coming in and totally rethinking the way these things look, how they feel, and how people interact with them.
Yeah, I mean, I think NFTs are incredibly powerful. I think there's a bunch of use cases that perhaps like artwork and collectibles is even a proof of concept for. But again, like people like this stuff, right? So like it's, you can criticize all you want, and we have a report we're going to drop soon on NFTs, and we talk a lot about the tech stack supporting most of the NFTs and how it should be better, how we'd like to see improvements in terms of what you're actually buying versus like what you think you're buying versus what you're getting a lot of times, right? I'm not saying this thing is like perfect at all, but people love it. And a lot of them are super interesting. And people are doing really interesting innovation around clubs and access tokens and loyalty stuff from fans, and brands are interested in it. And like, it's extremely powerful. And you're right, it appeals to a whole other demographic potentially but this is what I love to see, right? I mean, Bitcoin doesn't want to do this. That's totally fine. Like Bitcoin's working on a different project, right? And it's a big project. But the tent is expanding. I mean, we've got NFTs, to be honest, I would say basically other than Bitcoin, Bitcoin was perhaps the first breakout, app, quote unquote, for blockchain. And I think really NFTs are the second one. Obviously, I'm skipping over something like DeFi, which I don't really think has actually had its true breakout moment yet. But when you've got literally basically every consumer brand, literally every sports league on earth doing something with NFTs, it's hard to ignore that crossover appeal and sort of the true mainstream appeal that it has.
Absolutely. And then to shift gears back to something else you mentioned, the idea of a tech stack. I think this is such an important point. We know the history here from the development of the internet. The idea that you have a stack like TCP IP that has protocol after protocol, layer after layer of services stacked on top of each other. And as those services become more robust and more functional, it makes it progressively easier to do development at different levels. So you have the APIification, the building of application programming interfaces so that the code can be reused so that you have a consistent way to access services. This all makes the development and expansion of end user applications and end user functionality much simpler, faster, and cheaper to do.
Yeah, absolutely. I mean, and look, the NFT stack today is pretty nascent. I mean, a lot of it's built on, I mean, we do have some standards on Ethereum, 721, I think 1155 are token standards that can be used for sort of out of the box NFT creation. And so that's already just like with ERC20 for fungible tokens, that's helped make it easy for people to experiment with NFTs. But literally, like if it's a digital collectible, you know, if it's an ape or a punk or an art block, in some cases, like where the actual image is stored, there's issues around that. Like people say IPFS, which is the interplanetary file system, and just think that means it's like perfectly there forever. It's totally false. Basically, it's basically someone else's computer, right? Like we need some more robustness. There's a lot of reliance on centralized parties to make that current NFT like experience work. I think we can make it better, but it will get better, and I think that will all help push the adoption forward. I mean, one of the big questions that critics of NFTs have is like, you know, like, well, like what if they, first of all, they're censorable. Like what if the IPFS is, what if it's taken down? Now, sure, you own the token, but where's the image? Where's the thing you think you bought, right? And it's like, well, you know, but that's going to get fixed. That is getting fixed. Everyone knows that, right? We're working on that. I mean, I'm not working on it myself personally, but I mean, like this is a known criticism, and it's something when we get better at it, you know, I think they just become more interesting. They could be, and we're just, even this whole discussion, we're talking about artwork NFTs basically, right? And there's potentially whole wide other ranges of use cases for this, you know, technology that gets interesting.
Tiny subset of this technology. And by the way, we could go down a rabbit hole talking about distributed decentralized cloud storage for probably 2 hours. But before we make this into a 12-part Ken Burns style miniseries, I wanted to ask you, since we've been talking about Ethereum, give us your overall sense of where the Ethereum space is in February 2022.
Yeah, I mean, we generally view, you know, I've explained a lot sort of the difference, you know, how I think of Bitcoin, right? And Ethereum, I think of as a generalized computing platform. You can do a bunch of things. It has a virtual machine, and we've seen sort of waves of uptake and innovation, you know, again, in sort of an organic manner as to what people are using that composable environment for, right? We had DeFi summer, and then a big push around DeFi, a lot more interesting stuff as sort of token incentivization became popular. And then of course NFTs sort of, which of course have kind of always been around, right? You had punks came out a long time ago, I think, and then CryptoKitties. We all remember how that sort of clogged up Ethereum, right, in 2017, 18. So it's this generalized platform, and we wrote a report called Ready Layer One, where we sort of we argued that, and we sort of set Bitcoin aside again for this discussion because we kind of view it as this wholly different thing. But then you have Ethereum, which wants to be sort of the blockchain that you can build whatever you want on, and a range of other competitors, right? And so we sort of view Ethereum as being in this innovator's dilemma of whether it can scale, which can mean a couple things, but fast enough or faster than its competitors find distribution. So that's a classic innovator's dilemma. Can you scale? Can the incumbent scale faster than the disruptors find distribution? In this case, we mean, can Ethereum become faster, cheaper, more usable than, you know, faster than perhaps its competitors build community, you know, get wide distribution and ownership, and right. And I think the answer is probably no, because clearly we've seen communities, at least no today. I mean, we've seen big communities sprout up for Luna and AVAX and Solana and even others, right? Like those became very popular. I guess the point here is that if Ethereum didn't become expensive and in some cases was slow, very unlikely in my mind, and you know, I could be wrong here, but very unlikely that you'd have seen so much activity flow into these other alt L1s, which it did. And now, that being said, I mean, Ethereum is it's the most widely distributed of the smart contract enabled layer one blockchains. It's got the most value. It itself is worth the most. The most DeFi value locked is there. The NFTs that are worth the most are traded there, right? I mean, it's obviously the leader in that subsector of crypto, and they're obviously working on trying to scale Ethereum, right? I mean, I think the most notable stuff to me over the last year was the true proliferation of semi-viable or viable sidechains and layer 2s on Ethereum that basically help Ethereum scale horizontally today. And this is all setting aside the fact that, Ethereum 2.0 and which is the sort of this upgrade to Ethereum, right, that moves it to proof of stake and also perhaps adds other scaling benefits through sharding or these other technical improvements. This is leaving that aside, right? I mean, just today, in this year, we saw things like Arbitrum and Optimism and even sidechains like Polygon sort of pragmatically speaking add more block space to Ethereum by horizontally scaling it. And then, so, I mean, it's clearly the premier generalized computing smart contract blockchain, right? It still is. But there are others that are interesting. I mean, I think we've been focusing a lot on this concept of monolithic versus modular blockchains. And when you look at things like Cosmos, that ecosystem's been around forever. And they finally have sort of started to sort of realize their vision with the IBC protocol that lets these different Cosmos Tendermint-enabled blockchains talk to each other. And with future upgrades, it becomes interesting. Similarly, Avalanche has a different technological way of sort of getting to a similar outcome, which is chains that sort of subchains, they're called subnets there, that are maybe application specific, but kind of tied together in this broader ecosystem. And without going too far down the rabbit hole.
Polkadot as well, of course.
And Polkadot with parachains. These are all sort of different ways. Blockchain, they like to say layer zeros, but I do think this is an interesting alternative to scaling via layers. And it's a different alternative to something like Solana, which is much more about throughput and hardware enabled scaling on a single blockchain. So again, like in the design of these smart contract enabled blockchains and their ecosystems, there's a pretty large amount of differentiation in how they're actually approaching these problems of scalability and speed and cost to transact. And that's really interesting. I think Ethereum, as I've said, though, is still clearly the leader, but there are others that are, and I personally, I'm following most closely these more interoperability focused plays. I think if you're not going to scale via layers, to me, the most interesting way to try this is through sort of a layer zero type approach where it's either many blockchains that connect or it's a blockchain where you separate compute and data availability into different sort of areas or modules. And that's what I've been following a lot too. And look, Ethereum starts to perhaps look a little bit more like that in an ETH 2.0 world. But today you have, horizontal scaling through layers and sidechains.
Yeah, it's a fascinating conversation, this idea of an innovator's dilemma. By the way, if you haven't read Clay Christensen's great book, The Innovator's Dilemma, it talks all about this, the nature of S-curves, where value creation happens, and how innovators often get disrupted by new entrants in the space. It's a fascinating conversation. And by the way, talking of multiple part series, Alex, you're just going to have to come back and do this again. There's so much more to talk about. I feel like we could have talked for 12 hours here. But this was great to get you in to do this first conversation with Real Vision to talk about what you're doing. And I hope in the future that you and some other folks from your team can come back and unpack those individual reports that you guys are writing and talk them through, because you guys really are doing some very innovative work in this space to try and understand what's happening. Alex Thorn, pleasure to have you with us here today at Real Vision Crypto.
Yeah, Ash, great to be here. Hope to come back soon.
Thanks for joining us, everyone.
Hey there, visionaries. Your free membership to Real Vision Crypto, the world's premier source for cryptocurrency and digital asset analysis, is available right now at realvision.com/crypto.